So once again, welcome to my channel, and on today's video we are going to be learning how you can trade the forex market using the pullback strategy. All right, as we know, in the forex market, after every break of market structure, we definitely have pullback, and a lot of traders struggle with how to identify the right level to actually wait for price to pull back to continue the trend in the right direction. So if you're new to my channel, please, I would like you to subscribe. We offer an amazing free education on this channel that is going to help you grow your trading skills and knowledge to the next level. Trust me, by the time you finish watching most of the content on this channel, you're not going to remain the same and you're going to become a profitable forex trader. So let's go. Now, before now, I believe you must have understand the concept of market structure. And if you have not understood what market structure is, I will recommend you to watch the video on this channel that talks about market structure for beginners 2025. Now, for every break of market structure, even if it's a bearish market structure or a bullish market structure like we see here, we have a shift in market structure. All right, so for example, we use this side to give you a higher high, and we have a lower low, and price creates another higher high, breaking structure to the downside to create another lower low, and so on and so forth. Now, a lot of traders struggle with knowing exactly where to position to wait for price to trade to before price will continue to trade to the downside after this shift of market structure occur. And that is what we are going to be learning on this video. So now we are going to be using two tools to actually help form our trading decision. One is going to be the Fibonacci retracement tool. All right, we're going to be using this tool to actually help in this video to help us form our trading condition. Now, how do you as a trader apply this Fibonacci retracement tool to your trading? So for example, let me take this now. All right, we notice that the price was bearish at this level and we have a break of structure at this level. Now we notice there is a pullback, which is the internal structure, before we have price break structure to the upside to create a new higher high. Now, one of the things that I've noticed in the market, after every major structural shift, all right, we tend to see price most of the time have a major pullback that is mostly likely to trade below the 50% on this Fibonacci tool. Now, let me take this Fibonacci tool and also push it up for you so you can see the numbers clearly. Now, you can see that we have the 100, 75, 50, 20, and 0. All right. Now, for every level you see here, what a lot of traders are interested on, which is the major key players in the forex market, they want to actually sell or buy when price is cheap. All right. Now, what do I mean? The 50% is an equal price movement or equal price level for traders, especially the big traders. All right, they don't want to actually be trading anything that, for example, now on this bullish market example I just gave here, when we saw this market shift around this level, all right, most institutional traders or the hedge funds or the big guys that actually move the market, they will wait for this price to retrace all the way below the 50% level, maybe even got to this 20% level before they will fill in their new orders that will push price to take out this high and create a new high. So a lot of traders, most of the time, they do not know that after every major break of market structure, meaning a high that was supposed to send back price got taken out and created a new higher high, price will definitely want to retrace to the 50% or below the 50% level on this Fibonacci tool before we do what? Have price break structure to continue the trend. So this is one of the tools you can also use to form your decision. But now, these two alone is not enough. Another thing you need to consider too as a trader, if you want to trade this continuous trend after a break of market structure, is you can also look for a fair value gap. So we're going to be talking about fair value gap on our next video to actually help you form this decision. All right, we're going to be talking about fair value gap or order block. These are some of the things we're going to also dive into in this course of training. But now, if you don't even understand this fair value gap or order block, I want to show you the simplest way to know that the trend or the pullback is finished, that price is going to be what? Bullish. Now, this is what you can also do, all right? I explained that in one of our previous videos, which is using the change of market structure entry strategy. The video is on this channel, which is one of the entry strategy I actually use to trade the continuation of the market or even this pullback. Now, how is that strategy? How does that strategy work? Now, for that strategy, all I need to know is I want to study the key levels which I've marked for myself, all right, and see price trade into those key levels. Now, what do I mean? For example, if I know that I put in my FIB2, like I showed you guys now, from a higher point to the low, all right, of the market structure, which is the external structure, and I notice that this is the 50% zone. So I can easily mark this 50% zone. All right, knowing fully well that when price trade below this 50% zone and I see a shift of market structure, I'm going to make a decision to continue to trade with the trend. Now, how do I make such decision? Okay, for example, I've already marked this level. One thing I've also observed is after every break of structure, this pullback is something that will definitely happen within the minimum of 5 to 6, 7 days before we see price rehearts or reverse and start trading upward. I also explained this concept of 5 to 6 trading days pullback before on the change of character video that I also posted. So that video has a lot of information or knowledge packed on it that if you watch it, you're going to learn a lot. But let me still explain that concept. So we have each of these bars, all right, representing days of the week that price has traded. So for example, we say minimum of 5 days, all right, minimum of 5 days. Now, in these 5 days minimum that we have, let's say 6 days, okay? Only if you understand this concept that I'm going to be sharing just now, only this concept will change the way you trade every reversal point. So, what is the concept? Let me just show you guys. This is a strategy that if you master it, you're going to be making a lot of money from the forex market. So for example, now we said that price has broken structure, all right? So I'm going to be marking a line here, all right? And this line that I just marked, okay, represents our internal and external structure. So let me do that. That is our higher high and our lower low, all right, this very line here, okay? So I'm also going to be doing what? I'm also going to be marking this as a high point, and also going to be marking here, all right? So what does this has to do? This is this point and this is this point, all right? Now we said price will do what? Price we have to pull 50% or below 50%. So let me take the FIB2 and also measure this level, all right? So we see this level here as what? our 50%. And I said we want to see price trade below the 50% on these two. So we assume we want to see price trade to, let's say, in between 50% and also 20 something percent on these two. All right. So we have marked those levels, we delete that. So notice that we have our 50%, we have our 20 something percent. And like I said, we want to see price do what? Pull back all the way to below the 50% to have a change of market structure. So now whenever price break every structure, so let's assume that this level, this 50%, was where price what? Broke structure from. I want to make this video as practical as possible. All right. So maybe this was an uptrend, a downtrend. All right. All right. And price, let's say price break this level. So price was coming from the down and we break structure and we created this new level. So now we are saying that this low here is this very low. Okay, price came and we broke structure to create this low and we have this high. And now we are saying for price to continue to trade to the upside to break this level, we expect some level of pullback. So we are going to say this is day one from this level. Price started giving us a pullback. All right. And we saw price enter day two, traded up, came back, trade. Then we see price do this, day three, traded down, all the way up and came back. Day four, price traded into the 50% zone, continue. All right. And on day fifth, we saw something like this around this level. Price traded low and we broke structure, maybe back to this 50%. And around this level, once we see this shift in market structure, around this level, this is where we should be waiting for our entry. All right, which is one of the entry model that I've already shared, which is the change of character entry model. Now, once you see price trade to this level below the 50%, all right, and price give us a change of market structure, all you need to wait for is for price to give you a pullback to this level, creates a sort of change of character around this level. On the 6th, then the 7th give you this beautiful entry and you can enter your trade. All right. So now let's name these days again, because if you don't even want to study fair value gap, liquidity concept and all that, only this idea that I share with you can change the way you trade pullback. All right. So let's say that is day one, day two, day three, day 4, and on day 4 to day 5 we saw a market shifting on day 5 and giving us a pullback to come and take out the low that was created or the break of structure. And on this level here, we can safe to say we have a shift of market structure that occur around here. All right. And when price gives us this pullback, this is where we're going to enter our trade. Our stop loss is just going to be below this line. All right. And we're going to be targeting maybe 122 or 123, depending on what you are expecting to target. But notice this is where we have the shift of market structure. And we saw price created a low, went up, failed to take out that high. Then the price came back to take out the low that is created. All right. and we have this market shift again. So we see price break structure, created a low, went up, failed to take out that high because that's become our higher high, came back to take out the low that is created. Then we see price break structure to create another higher high. So this is what you are going to be seeing. We have a higher high, and price came back. Price came back to give us this beautiful higher high, and we can safe to say this place become our lower low. Remember, our lower high, because remember we have this lower low here and this internal structure here. Once price give us this higher low and we start trading into this zone, we are going to see price continue to give us a movement like this until we finally broke above this level to create a new higher high. So the moment we create that new higher high, all right, the moment we create that new higher high, this level will automatically become our next higher low. All right, and we can go ahead and mark here as our new higher high. All right, and we can safe to say price has what broken structure to the upside, so we can take this and make this our new break of structure. You see now? So remember, now we have a lower low that creates a higher high, have a lower low again that creates a higher high. All right, I hope you're learning something from this video. So after this major break of structure again, we can safe to say we want to see price give us another pullback. All right, which we are still going to be expecting price to trade, so maybe somewhere this level. If we also take our fib and we measure from that high to this low, we are going to see that around this level, all right, is below the 50% as well. Okay, so for every major break of structure, expect price to pull back or retrace more than 50% of that major break. All right, and when you see that kind of retracement, try to also count the numbers of days that retracement took place. Minimum that I've seen most of the time is 4 to 5, 6 days. So count the numbers of days, and maybe in the period of 6 to 7 days or 5 to 6 days, you see a change of internal structure. All right, because the internal structure is going to also be creating a higher low until you trade below that 50% on the Fibonacci retracement tool, trade below it, and once you count those days to be minimum of 5 or 6 days, like I've experienced and I will show you in the chart, and you see a shift of market structure, you can save to take your trade and target this high for your next profit. All right, and once that happens again, you wait for the market to give you another pullback again, just as we explained here, and you take another entry to the upside until maybe the trend change from a bullish trend to a bearish trend. So if you've watched this now, we have to go to the chart, all right, and show you this. So I'm going to be going to the 1 hour time frame, and so now I want to quickly show you an example of what I just explained. Now if we notice this movement here, we have a break of structure at this level. All right, and this is the low that created a high, and we have a new high at this level. All right, so if we should take our fib2 and measure from this high to this low. All right, so we can safe to say this level is our higher high and this level is our lower low. All right, now notice if we mark our 50%, you can see what we have here as our 50%. All right, on the Fibonacci tool, and we say we need to trade below the 50% to have a sum of a premium or discount. All right, so now let's count the days that this pullback actually was happening. All right, 5 to 6, 7 days sometimes. So we see how price start trading down after the price created this high. We saw this movement one day. Notice how the movement was creating a series of higher highs, and it was in days. We first broke structure. We broke structure here. These are the internal structure. You need to know that. All right, and we created a low. All right, we saw price traded back to this level, and price created a new low by breaking this structure. All right, all these whole lows, we can even extend it to this level. Then we saw how price created this high, and below the 50%, we saw this happen. We have a new lower low. All right, what do we see? What do we see? We saw how price change character from this level, breaking the structure. All right, then after that structural shift, we saw what happened. Price pullback, like I told you guys. All right, now if we should count these days that this price give us this pullback, notice the first pullback that we have was 1, 2, 3, 4, 5, 6, 7. Then we have a mini change, but could not produce any result. Price came back and created a low, and we saw this happen. But notice that after this structural shift, we break and we created a new high here. Price pull back, and we see how price has been moving to go and take out this major high that was created. Do you see now? But notice that this one tried to create a change of market structure, but because it was not up to 50% of the major movement, you see that the market do not produce any result. That is why I said that for every major pullback, allow the price to pull below the 50% of the Fibonacci or below. Now, once price pulls below that level, you are always going to have a beautiful entry if you spot a change of market direction. So this one happens here, or that might need the counting days were up to 5 or even 6 days like I expected. Notice that the pullback could not even take out that high. People have to wait for price to go below the 50%, see it as cheap or at a discount zone to be able to get involved in this market once they spot a change of market structure around this level. All right, so once you see this break of market structure, you can save to have the market shift, allow the market to pull back, take your trade, allow your stop loss to be around this level, target your 1 to 2 or 1 to 3 depending on what you're targeting as a trader, and you have this kind of beautiful entry. Now, if you pay attention and you backtest this strategy I just shared with you, you will see that 80% of your trade are going to be winning trade. Now, I can show you more on this particular strategy. Now, one of the trades I took earlier was because we have this level, all right, before price broke structure to create this very high. All right, within the internal structure because we are bullish on this pair, then this low actually created this low and we created that high. Now if I take my fib 2 and measure this level, notice that price is below the 50% and here is more like 20%, and this is one of the reasons when I call this trade, I actually took this trade today. If you follow me on my live session when I was on TikTok, this is one of the trade I actually called and I posted it. Now if we count the days, we can see that the pullback started from somewhere here. We have 1 day, 2 days, 3 days, 4 days, 5th day. We saw this reversal pattern happening here. Now I was able to call this trade today at this level while we have our stop loss around here and we are doing 1 to 2, which is somewhere here. I'm still holding this trade. I'm expecting price to actually hit my TP. All right, so this is how I actually took this trade, because I have to measure between this very low that created this high and watch out for the pullback. And I saw that we have pulled below the 50% zone all the way to the 20% zone, which is a discount zone, and I saw this market shift and I took this trade. Now the worst case scenario, this market can either go to my TP and try to break this high, or try to still pull and continue to come all the way down, maybe to give us from this very low. All right, remember this was the low that created a high, and notice price has not gotten to 50% of it. So if anything happen here, I will know that it's that same scenario that happened around somewhere here, that price may go to that level, which is here, take out that low and use it to drop further to come and take out this very low and even get to maybe somewhere here to see another major move on this particular pair. So if this trade fails to break and continue to trade above, and we even happen to hit stop loss on this kind of trade, I will just need to be patient for this price to do what? Sell and go below this low. And once it's below 50% and I saw this change of market structure again, I would definitely take that trade. So I hope you learned something from this video. Now, for you to have more idea about this change of market structure and how you can actually use it properly, I have a video here on my YouTube channel. Let me show you guys this particular video. All right, and this video I actually explained what you need to see, how you can use the change of market structure to actually enter your trade. So this is one of the video you can actually watch, and you're going to understand a lot about this change of market strategy entry. Not only that, if you are someone that is new and you struggle understanding forex market, I have another video that is going to help you understand market structure. All right, I just need to maybe look for that video again and share with you guys here on my page. Now this is the video. All right, this high. So this video, because of the knowledge that is packed on this video, under 3 days we have been able to do over 672 views. Now this is a video you don't want to miss. So if you're watching this video, I want you to subscribe. Take your time and watch this video as a beginner or someone that is struggling in the forex market. These videos are going to help you make sound trading decisions, and trust me, you're going to be learning a lot from this free video. What you would have paid money to gain or learn, you can learn there from this channel for free. So do well to subscribe, follow us on more videos, and we see you on our next video. Have a wonderful time, guys. Thank you.